Welcome to the deep dive. We're jumping straight in today, focusing on Pacir BioSciences. Their Q2 2025 earnings call wrapped up late Monday, August 5th, and well, it definitely moved the market after hours.
Absolutely. Our mission today, to really cut through the usual call transcript noise. We want to pinpoint what exactly drove that bullish reaction we saw, especially given the slight revenue miss. We're digging into the execution, the strategy, and that crucial forward guidance.
Right. So headlines first, because you need those fast. This was a bit of a mixed bag, wasn't it? A classic beat on the bottom line, but yeah, a slight miss on the top.
That's the crux of it. Non-GAAP diluted EPS, it came in at 7.54 cents. That was, comfortably above the consensus range, which was sitting around $75.73. So good cost control there.
But the flip side, revenue. It landed at $181.1 million. That fell short of what the street was looking for, somewhere between, $183.1 million and $186.7 million.
Yeah, so a couple million light, depending on the estimate. And GAAP EPS showed a net loss of 11 cents, about $4.8 million.
Okay, so beat below, miss above. Why did the market react positively then? Shares were up, 3.5% after hours?
Exactly. And that reaction tells you the story. The market looked past the revenue miss. It suggests the quality of the results, particularly the forward-looking stuff, just outweighed that top-line shortfall.
And they backed it up with capital allocation strength too, right? They bought back $50 million in shares, retired about 2 million shares. Adjusted EBITDA looks solid at $54.3 million.
Yeah, they're actively managing things. It wasn't just a static report. It felt like a show of discipline, kind of setting the stage.
Okay, let's dive deeper then. Operationally, EXPAREL is the flagship, the engine, net sales there, $142.9 million. But the detail that really jumped out, for me anyway, was the volume growth.
Oh, yeah.
Plus 6% year over year. That's the highest growth rate they've seen in 8 quarters.
8 quarters, wow. That really does signal accelerating adoption, doesn't it?
It seems like it.
And management was pretty clear. They attributed that directly to the no-pain value prop finally getting real traction, especially in those high-volume settings like ambulatory surgery centers, ASCs, and community hospitals.
That's where the growth is concentrated?
Seems so.
Yeah.
They mentioned high single-digit, even low double-digit volume growth there. It confirms the strategy is working where, reimbursement makes it easiest.
Okay, so EXPAREL is hitting its stride on volume, but then there's ZILRETTA. Sales, there were $31.3 million. Pretty flat, maybe up a couple percent year over year. So if EXPAREL's doing well, ZILRETTA clearly needed something, a catalyst.
It absolutely did.
Yeah.
And while the sales were flat, the offsetting news was significant progress on market access. That's really the foundation for future growth. They said they're tracking ahead of plan on commercial coverage.
How much coverage?
They estimate over 40 million commercial lives now have access to EXPAREL separately reimbursed outside the bundle. The target is 60 million commercial lives by year end.
Okay, that phrase, reimbursement outside the bundle, that always comes up. Can you just quickly break down why that's so important for hospital adoption?
Sure. So when a drug is in the bundle, the hospital gets one fixed payment for the whole procedure. They have to eat the cost of expensive advanced drugs like EXPAREL. But when it moves outside the bundle, the hospital gets paid specifically for the drug. It removes that financial barrier.
Ah, okay. So it unlocks the economics for the hospital system. Makes sense.
Exactly. Makes adoption much easier. And their total target, including government plans, is near 100 million covered lives.
Yeah.
That's a huge potential market unlock.
Right. So good operational execution, driving access. That leads us to the bigger strategy. Management kept talking about their 5x30 plan. 5 partnerships by 2030, all focused on non-opioid pain. And the big news this quarter was definitely the Johnson Johnson deal.
Yes, the ZILRETTA co-promotion with J&J MedTech, announced July 22nd, so pretty recent. And what's really interesting is how it acts as a commercial force multiplier. Meaning they get to leverage J&J's massive early intervention sales team and their, huge customer base. Pacir doesn't have to build out that kind of sales infrastructure themselves, which takes time and a ton of money.
So they effectively double their sales calls for ZILRETTA overnight, almost.
Pretty much. It should meaningfully speed up ZILRETTA's growth by pushing it beyond just orthopedics. Think sports medicine, pain management, rheumatology. J&J opens those doors.
And the financials work.
Management was careful to point that out. They said the impact on gross to nets is pretty minimal, low single digits, plus or minus 1%. And they expect the deal to really start benefiting the bottom line in 2026. It's a longer-term play for efficient growth.
Okay, efficiency again. Which brings us back to the guidance, which you said was the key driver for the stock reaction.
I think so, yes. It really seemed to be the core message the market received.
So let's unpack it. Full year 2025 revenue, they narrowed the range, $730 to $750 million. Narrowing implies more certainty, I guess. But the real headline was the margin boost.
Absolutely. The quality of the guidance just shot up. Non-GAAP gross margin raised significantly. They moved the range from 76-78% all the way up to 78-80%. 2 full percentage points at this scale. That's huge. That speaks volumes about operational discipline.
Where's that coming from? How'd they find 2 points of margin?
2 main things. First, better manufacturing efficiency. Those investments in the bigger 200L facilities are paying off. Yeah. And second, the EXPAREL royalty obligation went away. That helps too.
Ah, okay. And wasn't there something about decommissioning an older facility too?
Yes, exactly. The older first-gen 45L suite, they announced shutting that down will save an estimated $13 million a year in operating expenses. And that starts now in Q3.
Okay, so that connects the dots. Higher gross margin, lower OpEx starting now. It really shows they're focusing on profitability, margin durability, not just chasing revenue.
It's a higher quality guidance profile, definitely. It signals a clear pivot, prioritizing EPS and shareholder value through, internal efficiency, growing the value of each dollar earned.
Makes sense. Okay, quick look long term. The pipeline. PCRX 2011 for knee OA. They had some positive 3-year data out in June, right? Okay. Good efficacy, safety looked okay. And the phase 2 study, Ascend Part A, should finish enrollment by year end.
Right. And beyond the clinical pipeline, there was also a pretty significant IP win. The re-examination of the 495 patent. It was completed. And they actually amended it to include volume limitations.
Which strengthens the patent protection?
Significantly. Basically locks down their position well into the 2040s.
Wow, into the 2040s. In pharma, that's practically forever. It really underlines how critical these products, EXPAREL and ZILRETTA, are to their whole strategy. They're protecting the foundation.
Absolutely. It provides massive long-term stability and sort of cements their claim in the non-opioid space.
Okay, so let's put this all in context for the listener. Why should you care about all this? Well, look at the stock performance. Pacer has crushed its peers. Over the last year, depending on when you look, total return is somewhere between plus 85% and plus 105%.
That's huge outperformance. Compare that to the broader biotech ETFs, XBI or IBB. They were only up maybe 5% to 8% in the same period. Even S&P 500 was only up 18%.
So expectations are sky high now.
Extremely high. To keep this run going, they really need to deliver on that ZILRETTA acceleration post J&J and maintain the EXPAREL performance, the mix, and the price. Management basically said it themselves. They're prioritizing opportunities that boost operating margins. The focus is margin expansion, EPS growth.
Okay. Which leads us nicely into our next segment. Time for an outrageous but plausible trade idea. Remember, everyone, this is just us riffing on the call dynamics, analyzing momentum and catalysts. Definitely not financial advice.
All right, here's the pitch. The thesis is built around that market reaction we discussed. It showed management has credibility now. Their pivot to efficiency, returning capital, the market bought it. That higher gross margin guide, 78-80%, plus the $250 million still left on the buyback. That creates a floor and a catalyst. It justifies a higher multiple, even with the slight revenue miss.
Okay, so how do you trade that specific thesis?
The idea is a leveraged long position. Specifically, structure it as a synthetic long call spread. And you center it around the next 2 guidance updates, Q3 and Q4 results.
Why that structure?
Because you're buying the efficiency story. That $13 million in OpEx savings starts hitting the P&L in the Q3. The margin lift flows straight to EPS. That should justify a higher multiple before the market fully prices in the J&J benefits for ZILRETTA, which are more of a 2026 story.
Ah, I see. So you're betting on the CFO delivering those savings immediately and using options to leverage that near-term margin and EPS improvement, pulling forward the re-rating while the buyback provides some downside protection.
Exactly. It's a bet on execution and capital discipline trumping any lingering skepticism about near-term revenue growth.
Okay. Aggressive, plausible, definitely timed around the flow of news from the call. I like it.
It captures the narrative.
So quick recap of our Q2 deep dive on Pacer Bio. Strong EPS beat, driven by that cost control. Really significant margin guidance raise up to that 78-80% level. And the big strategic catalyst is the J&J deal for ZILRETTA, but that's more for 2026 growth.
Right. And given that focus on the 5x30 strategy, the partnerships, the capital allocation, What should you watch next? The key checkpoint, I think, is the sequential sales trend for ZILRETTA. You need to see if those J&J integration milestones actually start bending the adoption curve upwards. What does that curve look like in Q3, Q4?
Something for you to definitely mull over or dig into yourself. That wraps up this deep dive into Pacira BioSciences Q2. We'll catch you in the next call.